Happy Monday, and also happy President's Day, and happy General George Washington, aka President George Washington's birthday. Okay, so today we're going to be doing a little interesting video here. There's a lot on the screen. Hopefully it doesn't overwhelm you all. Firstly, I need everyone to go and grab, I'm actually out of coffee right now. Somebody asked me in the comment section down below, how do I like my coffee? Black primarily, or a couple tablespoons of heavy cream. No longer dabble in the artificial sweetener coffees. I actually had some health problems drinking a lot of that crap. So I like keeping it real. But yeah, just primarily black coffee. But grab some water, pause this video because this episode's going to be a little lengthy, and it's all going to be about SoFi. Once again, this YouTube channel is not primarily supposed to be around SoFi. I'm a raging SoFi bull. If you're new here, welcome. If you enjoyed today's episode, smash the like button, subscribe. We're about to hit 100 subscribers on this brand new YouTube channel. I run other YouTube channels. My main YouTube channel is actually a video game channel, believe it or not. I have not advertised this channel just yet. I'm looking to grow it organically. But a couple of my gaming subscribers have found this and they're like, wow, I love SoFi too. Subscribe. So if you do want to see more of these videos, definitely subscribe here. I cover a lot of different stocks, primarily growth stocks, but I'm a raging SoFi bull, looking to be invested in SoFi for the next 10 years, unless their strategy changes. And then I got to change my strategy. You got to keep that in mind. There's no such thing as investing forever, okay? If the company is moving away from your strategy, you don't got to be a financial advisor to figure out, like, hey, maybe you got to run some numbers. Maybe you got to do some different price projections. And you got to remember that. Currently, I own over 2,000 shares of SoFi. I've been buying bonus shares of SoFi over the course of the last couple months. And honestly, if this company continues to go down to Chinatown, I'm going to pick up bonus shares. So, like I said, if you do want to see more of me, subscribe here. Hold on. I got to do some water cheers momentarily. Ah, there we go. Dealing with some allergies. Okay, so I don't like making these types of videos. They're actually my least favorite to make, but I've actually had quite a few people been commenting on my videos, even my older videos over the last month or two, saying, hey, can you please make a price projection of SoFi based on just basic fundamental analysis throughout 2026? I'm a fundamental analysis investor, and I'm also a technical analysis investor and also trader. You got to know both on a technical and also fundamental. Obviously, people that are very, very long-term investors, individuals like, I want to say, well, he's pretty much retired now, but going back as like Buffett, okay? Very, very long-term. When they buy a company, they're buying long-term. Berkshire Hathaway actually got into Google last year, and Google stock went up by 15% after they bought in, because they are known to stay in a stock for years, and it takes chips off the table, outstanding shares. So when a company or individual like Berkshire Hathaway buys into a stock, the stock is gonna potentially stabilize a little bit, or very well go up as well too. It can also go down as well too. But they're known to staying in a stock a very long time. Okay, me personally, I have a game plan and a strategy, and if my game plan and strategy changes because of what the company is doing, then you gotta start changing your strategy. It's called realism. Okay, it's when you're not investing on hopium, and you're investing on realism. I ended up selling a little bit of my meta position this past week, and the reason being is because I look at all these big companies, they're spending an outrageous amount. what's going to end up happening with all this CapEx spending, capital expenditure spending, and I'm so grateful that SoFi doesn't necessarily fit this category, but I will say that if we continue to be diluted by SoFi, that could be the same thing almost as CapEx spending. Because as a shareholder, when you're diluted, which means they do more offering of shares, like it kind of feels in a way that it's the same as a company spending a ridiculous amount of money, and that money is going to be depreciated because all their CapEx spending on data centers, aka chips, well, they're going to go down in value over time. Okay, they don't appreciate. Okay, prime example. I bought myself a really nice Christmas present, a brand new gaming laptop, which I'm on right now. The thing is a utter beast. I ended up upgrading it. It was close to $5,000. My last laptop that I got was January of 2022. I spent a little bit under $4,000. I am a nerd, and this laptop that I'm on right now is friggin' amazing. It goes down in value. Why do I dabble in laptops? I do a lot of traveling. I'm very mobile. I have a military background too, so I'm very used to always picking up and going and stuff. Not in the military anymore, but I just have the mentality of, hey, I'm gonna grab. It's easier for me to grab my laptop. What is the downside of that? It doesn't go back up in value, it goes down in value. Okay, we're getting a little bit off topic here, right? SoFi, price target for the end of 2026, currently of what they're really doing and what I'm thinking in my noggin. Because I'm not over here just spending money recklessly, buying shares. I'm over here making well-rounded decisions, which creates more revenue for me in the future. It's a very simple thing to do. So I ended up uploading this video 9 days ago. Like I said, 99 subs on this baby channel. I'm probably gonna get 100 here, and then some a-hole is gonna unsubscribe. It happens every single time, but yeah, let's definitely get 100 subs on this channel, shall we? Then we got to get to 200, and then 250 is better. SoFi is undervalued. Anthony Noto. So Anthony Noto did an interview with Tanner and Tevis, other big YouTubers in the SoFi community, let alone in the stock community, and the video went viral within the SoFi community. And I mean, yeah, it definitely, it was no surprise of the video going viral. Anthony Noto, the man himself, stated that the company is undervalued on a FA. Is it undervalued on a technical analysis too? Oh yeah, big time. So with that being said, he stated as long as he's not in a blackout time period, he's going to be buying more shares. He threw out a very rich evaluation based on what they see for the company. You got to remember, the management team of a company is always going to throw out a higher number of their stock. And the number he threw out was really in the 30s for like a price range. I think he gave like a evaluation of the high 40s or something like that. Is that what Wall Street is going to give to SoFi? Because we are still waiting to see what Wall Street gives to SoFi. Wall Street gave a insane evaluation to Palantir because that's what Wall Street gave Palantir. The house always wins. Wall Street is going to do what Wall Street's going to do, just like a casino is going to do what a casino is going to do. Hold on. Man, my coffee dried out my mouth. If Wall Street gives us a crappy multiple, hey, that's what's going to end up happening. At that point, it's going to be really all about the management team to really break that crappy multiple. Can Wall Street give a stock a crappy multiple and then change it? Sure. Yeah. They definitely could. And it's based around what the management team is doing. Obviously, if SoFi is growing a ridiculous amount like Palantir, hypothetically of 70% growth rates per quarter, Like, Wall Street's going to have a hard time justifying, hey, let's value SoFi like a bank, right? So, if you haven't seen this video that I posted 9 days ago, it's all about SoFi. It's really good to go ahead and watch. Okay, so I want to go over some fundamental analysis on SoFi. If you are unfamiliar with fundamental analysis, it is something that you must do as a investor, or even really as a even if you are looking to do a trade. Okay, I've traded stocks in the sense I've taken day trades. I've taken short swing trades where it's less than a couple months. I mean, hell, I've been in a stock for literally 1 week. I have still glanced at their at their friggin' their quarterly statement. Okay, I've glanced at their earnings statement. Pretty much just taking a glance, and I've also run some quick numbers and saying, hey, what is this company doing? Obviously, all the companies that I've day traded have primarily been penny stocks, so yeah, they're negative revenue, negative EPS, but I still glanced just to go ahead and see this stock is running to the moon right now. I'm going to take a day trade, but I'm just a little curious why, what is going on here. You should just, it's very quick. You don't need to be spending a ridiculous amount of money. I primarily use Google Gemini for a lot of this stuff. And I'm in a student status right now, so I'm chiseling away at my MBA. So I get a year's worth of Gemini Pro for essentially free, but not really free-ish per se. It is so worth it. It actually is very much different than the basic. I'm not sponsored by Google, whatever. But a lot of the easy stuff you can do is just ask Gemini or Google. Just type it into Google and just run some friggin' projections, okay? Ask Google, literally based on what the company is going to be doing, price in what their earnings and what their price target is going to be for the end of 2026, and it's gonna give you a bunch of different numbers, and the explanations are basically here. So right now I want to talk about, actually, before I talk about the price targets, I want to pull this up because I did go over SoFi's earnings, and this is actually very valuable and goes along with everything that I'm going to talk about in today's video is really the revenue, okay? So the reason why Wall Street is having a hard time around SoFi is because it is a disruptor company in the banking sector, which is the reason why I personally love SoFi, is because there's no other bank like it. It's a all-in-one shop where you can do everything. They don't have any branches. The customer support is friggin' amazing, and once you're in their ecosystem, you're golden. Like once they acquire you as a customer, like you're good. So the revenue is broken down by lending as a bank, through student loans, through personal loans, refi, through just anything lending, mortgages, etc., right? Then you also have the financial services department, which is exploding, and then their technology department, their Galileo platform is lagging. Okay, now the thing about 2026 is that it is really a coin toss about what can happen once we get this new Fed governor in. President Trump wants to unfreeze the housing market. So if the housing market gets unfrozen and we do get interest rates cut down by a full basis point and people start feeling good about real estate again, SoFi's lending department could very well be exploding. Because right now, their financial services, it grew, I don't have the percentages up here, but their financial services grew the most. I believe it was like over 70-something% year over year. Don't quote me on that. It was a shell shocker. So one bear argument is that if the housing market gets unfrozen, and this really isn't bad for SoFi if you really think about it, but if SoFi's lending department starts exploding, Wall Street can really argue against the tech area of this company and be like, well, the lending department is now exploding. Yeah, it's a bank. Let's go ahead and give SoFi a bank multiple of just whatever their book value is. That would mean SoFi's price would be like $7, $8. Or maybe even like higher. I think maybe $7, $8, $9, like valued as a bank. That would be that would not be good. On the flip side, the bull case, my case, is that once the housing market starts to unfreeze, yeah, we're gonna get more lending's gonna be skyrocketing. But once again, once they acquire you as a customer, you're in the ecosystem. Okay, like SoFi, I'm actually moving a lot of money. It's I did 15 years in the Marine Corps military. Ended up going out the medical route. Retired now. 37 years old, and I do all my banking at military banks. Navy Fed, USAA. Their checking and savings yearly like interest that you get for having money is garbage compared to SoFi. Like, I have a SoFi savings and checkings account, and like, you get a lot more for keeping your money in SoFi. Now, it is a strength that they're using to keep people in their ecosystem. But I get emails all the time from SoFi about great offers, and I'm like, man, like, it's incredible. So if they're going to be picking up a lot of people on their lending side, you would think that their financial services are going to go up just as much. That is the bull case. And that's also my case against the bear case, right? My argument is that if their lending department skyrockets, it's going to carry their financial services department too. If you agree with me, definitely comment below, because that is the bull and bear case. A lot of people are arguing over that on social media, saying, "Oh, no, it's not going to be like that. Their lending department goes up, it's not going to matter about their financial services department." I'm like, no. SoFi is like Adobe. Another great stock, another great company that I own. Once you are in their ecosystem, you're in. They have you as a customer. They hold on. I keep things real here. Real talk. Don't really do a lot of editing. Need some lubrication in the throat. But SoFi, once they acquire you, like I said, it's a bull case. And they released the data of members growing like crazy. They're gaining new members. They're soaking up market space of the banking sector. So this is very important here, okay? Now let's go ahead and look at some charts that once again, you can type this stuff literally in on AI and it will do a great thing for you and map everything out. So I basically pretty much, so Anthony Noto has stated that they're looking to do 35% growth rates for Q1. He said in his interview that it would be a shame if they only did that for the year. He also stated that, yeah, he does sandbag. So does every other CEO out there. I mean, that's what CEOs are supposed to do, right? Oh yeah, we're going to do 35%. Boom. We're going to do 40%. So, I ended up making a chart based on two things. 35% for the entire year, quarter over quarter, and then 40% on a higher basis if they're going to be doing that. Now understand that SoFi could very well put up 35%. Maybe Q2, maybe something happens, but maybe they explode in Q3, go to like, something crazy. It's all about the guidance fulfilling for like, what are they going to be closing on a year over year basis? That's going to be really big, because I'm in here for the long haul. So I'm not really worried about quarter over quarter. You have a bad quarter, you go to timeout. Like right now, SoFi is in timeout. You pick up discounted shares. My philosophy is very simple. If you've been following me here on this channel, if you're a long-term investor, you buy the fear, you buy the blood, you buy the dip, you pick up discounted shares for the future. If you are a trader, you buy the fear, you buy the blood, you buy the dip, you sell the rip. It's a pretty basic concept. That strategy has made me life-changing money and continues to make me a profitable investor and trader. And I live a very comfortable life financially. Um, a lot of people, they get freaked out when stocks go through a bad quarter or maybe 2 quarters and they don't buy the dip. People were okay paying for SoFi at the high 20s and 30s at all-time highs, but now they're not okay buying SoFi. What? You're not okay buying SoFi now, but you're okay buying it in the high 20s and 30s? I wasn't buying SoFi in the high 20s or 30s. I wasn't. Okay? Several months ago, when I was posting a lot more frequent videos on this channel back in mid-October, I was pretty much saying, hey, I own on my private account, I own 1,642 shares. And then on my public account, my channel account, I own, I believe at the time it was like 350 something shares. Now it's over 400 because I've been picking up bonus shares, but I wasn't buying stock. Why? It's because the stock was trading rich. Now the stock is trading cheap. So you gotta, it's right now when I buy the blood, it is a natural feeling for me. Years ago, when I started to really get into this stuff, it would make me feel uncomfortable. The entire stock market's going down to Chinatown. When you start doing this, it's gonna make you feel nervous, but as long as you buy stock in companies of management teams that are phenomenal, you have no worries. Prime example, Liberation Day last year. A lot of people are saying we're in Liberation Day this year 2.0. Last year during Liberation Day, I bought the entire V shape. I bought on the way down and I bought on the way up. I spent over $100,000 hard cash. Don't trade on margin. I was buying Nvidia below $100. Palantir on 2 different accounts. In the 90s, 80s, high 70s. AMD shares, which I still own, below 100. Meta, I was buying like crazy. The point about it is that as Liberation Day was happening, I was like, I was licking my chops. I've been doing this for a while now. When I first started doing this years ago, it felt very uneasy. Like watching the market just be red, like you get anxiety. You're gonna feel nervous, but understand that if you're doing it on phenomenal companies and there is a geopolitical issue happening like Liberation Day, that is the generational buy of a lifetime. Right now, the stock market's going through a software company generational buy right now. Different topic for video. Okay, on point with SoFi here, and then I'm good to be wrapping this video up soon. I'd way over my limit on here. Hopefully, you all are enjoying my longer episodes. Coffee. So we see this chart graph based on 2 things. If SoFi goes ahead, so 30 let me go ahead back up. Actually, let me go ahead and take off the graph. Look at this chart. So, if SoFi is valued at a fintech, and this is the argument right now, what is Wall Street going to give SoFi for a multiple? Okay, because if SoFi is going to be a fintech, we're probably going to get anywhere between maybe, because Anthony Noto stated 40 multiple, but is Wall Street going to give us a higher multiple? It really depends on how much our tech platform, and SoFi has stated, their management team has stated that they have deals lined up for their tech platform. If we start seeing Galileo, their tech platform, accelerate in revenue, they could very well justify this very rich, like 50-60% evaluation of what they're getting. Wall Street's going to have to give them that multiple, okay? So if SoFi grows 35% straight for the year, on the low side of 20x, you're looking at the end of the year being 23 something. That's I mean that's above where SoFi is right now. Do I believe it's going to be like that? No, I don't. Obviously 30 much higher. 40 is obviously near the $45 sweet spot range. And then if they come in with 40% quarter over quarter, now you start seeing a higher amount. Something within the company has to change fundamentally on a bullish side. Their tech platform has to pick up to really get this high multiple evaluation. Is it possible? Well, do you trust the management team? Because the management team has stated 26 and 27 is going to be your big years. I'm not God. I can't predict the future. And honestly, neither can the management team. The management team could execute and we could go into a mother of all recessions for all we really know. We could very well go into a labor market recession this year. SoFi's going to get kicked in the nuts. It could happen. My own personal viewpoint, I really do believe that SoFi is going to maintain 35% as pretty much a solid case throughout this year. That may be a little too rich, but their management team has just been executing. And unlike Robinhood, they are a disruptor. They're not a risk-on company. Robinhood is a risk-on company. SoFi's a disruptor, and they could eat away market share even in a recession from a lot of these other banks. They really, I mean, is SoFi gonna get kicked in the teeth potentially? Oh, absolutely. Their lending revenue could very well get hit, but they could also be eating up a lot of other the market share from so many different banks. So, I really just, unless something happens within the economy, it's hard to really see SoFi dip under 35% growth rates. And it's really hard to see Wall Street give a evaluation on SoFi at 20%. Okay. Could SoFi do 40%, for a couple quarters, maybe do 35% this quarter, or, maybe 30, 36, 37? Sure. And then the next couple quarters, maybe 40, maybe above 30. Sure. That would be awesome. Ultimately, my own prediction is that I do see their tech platform definitely accelerating, because I've listened to the conference calls and I trust the management team. I do believe they have some big deal lined up. Not necessarily up their sleeve, but it's just they've been saying this for a while. Okay. I do see their Galileo tech platform going up substantially this year. Could be wrong. And because of that, we could be getting a very more tech multiple. Their financial services, I see still exploding. And I also see their lending department going up, because we're going to be hopefully in a lower interest rate environment. So at the end of 2026, if you were to put like a gun to my head per se, I would say probably around this 40, anywhere between 40 to 50 multiple. I could be dead wrong, by the way. But that is everything based on the management team and their execution. So, that could very well put the stock price anywhere from mid 40s to as high as potentially like mid 60s as like a super bull argument. Let me know down below in the comment section if you agree with me at all, if you think this is ridiculous. If you are a bear, definitely let me know, because I do love listening to bears to see if I miss anything. And right now, the bear argument is just that SoFi is going to be valued as a bank, and that's pretty much about it. But how can you say that when their other services are going up to the moon? Okay. Last thing on a super closing note that I'm going to really wrap up here is that 2020, 2021, I made life-changing money because all I did was take a little bit over 100K and I bought the Rona stocks. My first year in the stock market was a generational buy. A little bit over 100K to multiple hundreds of Ks. I didn't know anything about fundamental analysis. All I did was look at stocks, and I literally said, I can picture this stock being here. I made stupid amount of money by dumb luck. This is not the type of market to be doing that. Let alone we may never have that type of market ever again. Because we are in a bull market. But understand that just because we're in a bull market, just this bull market is not the same as 2020 and 21 bull market, okay? You're never going to see the same bull market versus the same bull market. You're never going to see the same bear market be the same bear market, okay? Obviously, the Great Depression was like a once in like a century like thing, right? Same thing with like the Great Financial Crisis. The point that I'm saying is that you got to do your due diligence. I've done my due diligence and I've spent hours listening and doing research and listening to their management team, watching Anthony Noto on interviews all over the place. That is how I come up with my price predictions, and that is how I know when a stock is a buy for bonus shares and when a stock is not a buy. If SoFi's fundamentals change, once again, you got to know the fundamentals. If SoFi fundamental changes for whatever reason, like let's say hypothetically, they start doing stupid things. Maybe they do stupid things as in they change their strategy, or maybe they get rid of their tech platform or something that takes away of them being a disruptor bank. That is gonna make me change my strategy. So you got to understand running projections. It's very easy, and you also got to know how to value. Like I said a couple months ago when SoFi was in the high 20s and low 30s, I was not buying. Okay, if you bought SoFi in the high 20s, high 30s, hey, it's called dollar cost averaging down. But right now, SoFi is in areas where I'm nibbling on in for bonus shares. When SoFi is overvalued, it means two things. If your trading strategy is taking profits off the table, you take profits off the table when a company is highly overvalued. When a company is undervalued, like right now on SoFi, it's bonus shares all day, baby. So we really got to wait and see what happens. This video is definitely longer than expected. Hopefully you enjoyed video primarily about SoFi here. And happy Monday once again. New video tomorrow. And yeah, let's see what happens, guys. All right, later, everyone.